Here's what we're talking about during happy hour. Another bad housing report. Sales of new homes dropping by a record amount in '07. The CEO of Sears steps down as that chain, which also owns Kmart, tries to revive struggling sales. President Bush gives his final State of the Union speech tonight. FBN will be all over that. And the Federal Reserve meets this week to decide on another possible interest rate cut. And that trader who racked up $7 billion in losses for a French bank, Societe, I can never do.
SocGen.
SocGen. That trader's free, but he still faces charges. God, I should have taken French in school. The Dow ended the day up 177 points. The NASDAQ almost 24 points, and the S&P gaining 23. Well, on the earnings front, we told you about American Express, profit down 10%. That's because it's allocating a lot more money to bad loans that it expects from its wealthy credit card holders. SanDisk also reporting earnings after the closing bell. And McDonald's stock tumbled more than 5% today because sales were flat in December, again raising concerns about consumer spending. And also VMware, we were talking about that.
Down huge, it looks, after hours.
Yeah, about 24% at last check. And because even though the profits were great this past quarter, not as great as the street was expecting.
You know, I'm going to have to dig in. There's got to be something meaningful for that stock. That's got to be at an all-time low. It came public just, within the last few months. Stock's been on fire, come back way down already.
Microsoft. People are worried about Microsoft coming in.
In all seriousness, this is a classic example. You got to do your homework and stay focused on these things. Keep your eye on the big prize, and sometimes you got to walk away.
It's hard to do when we're at the bar.
It sure is. I tell you what. By the way, speaking of McDonald's, speaking of McDonald's, Scott Rothbard, who mentioned he'd been selling some a while ago, was buying some back today on the weakness. I read that today.
Oh, so he's positive about it. He has some confidence.
He liked it. He liked the report, actually. Guys, now that the markets are already down 15% from the recent highs, most everybody's in panic mode about what they should be doing with their investments. But you don't have to freak out. Viewers of Happy Hour have already heard me talk a lot about the financial advice I've been giving my mom. So how about some motherly advice in real time then? Yep. Joining me now from my hometown of Ruidoso, New Mexico is high school English teacher and my mom, Donna Jean Willard. Steve Grasso, managing director at Stuart Frankel, is also here. How you doing, Steve?
Good.
Mom, are you on the line?
I am here, Cody. Hello.
Hi, Mom. How's it going?
It's great. How are you?
I cannot complain. So, Mom, first off, correct me if I'm wrong, sometime October, November, even maybe December, when were we talking about that you needed to get aggressive and take 20-30% out of your 403B, I believe you call it down there as a school teacher?
I think that is right, Cody. Okay, I've got my notes here, and in October, you recommended that I take 20% out, and then in December, you recommended before the year ended that I take around another 10 plus or minus a little bit out. And so that's what I did.
Better to be lucky than good, right, Mom? So, Mom, I mean, I sent you an email last week saying, hey, maybe we put 5% of that back in, meaning that, if you take 30%, you take 1/6 of it and put it back in the market. Did you do that last week, or are we still trying to figure out what we're going to do that?
No, I have tried to follow your directive.
So you did put it to work already?
Yes.
Back in a technology fund that we were looking for?
Yes.
What do you have that 25% in that we took out? You got it in treasuries or a money market fund, or what do you got it in right now?
Right now I have it in treasuries, and that was basically one of the questions I did have is I felt like that was where it should be, but is that versus a money market? Where are we now with that kind of thing?
Well, I'm going to ask Steve what he would suggest. If I wanted to be somewhat conservative, and I'm worried about the money markets, I don't consider those cash.
Right.
We went into treasuries, but at this point, I'm even worried that treasuries, as Brian was alluding to earlier, there's been such a flight to safety. Are the treasuries bubbled? Do I need to get my mom out of treasuries and into a money market or gold or what?
You know where I'm going to go with this, and it's not going to be as conservative as where you want to be for your mother, but I'm going to say she's got to, start segueing back into equities. I'm not a treasury guy.
I'm not arguing that at all.
So
we're down 15-20%. A lot of the pain's already priced in.
Exactly.
So you're saying you like technology?
Okay.
You're going defensive on me.
No, I'm not. I'm going to go way off the other side because you're going to hate it. I'm still buying financials.
I'm not going to argue that at all. We've already perhaps seen them bottom. So much write-downs. Mom, you sort of following what we're saying here. In other words, we're trying to figure out if you're going to put some money back into the markets, let's go ahead and sell some of those treasuries to do that. And, take another 5-10% of what you've got of your nut there and, put it back in the market. In other words, if you sold 30% take a third of that, put it back in now. Let's do another third. You know, we'll talk in another couple of months, depending on time and price. We'll figure out when we start putting more.
And once again, buying the indexes.
Right.
You know, that's the safest thing. The XLF. It's the safest thing she can try to do. Instead of trying to be stock specific, just buy the sector.
That being
buy
said,
the home builders.
Revolutiononomics hasn't filtered through the root of the school system quite yet. And she's very limited in that options of IRAs. What's actually offered.
Does she know that we're going to cut your hair on air tonight?
Mom, you're not going to let him cut my hair, are you?
Hey, I'm staying out of that. I'm staying
As
out
always,
of that.
I love you so much, Mom. Thanks for coming on the show.
You.
Quite an honor to have you.
Well, thank you. I hope I was helpful.
You very much were. We'll have to have you back, Mom. Thank you, Steve. We're going to talk a little stock picks, I think, now.
Sure.
We started hitting on this a little bit. You're talking about the financials. You know, everyone's in panic mode. Everyone's writing everything down. There's a credit crunch. Everybody comes on the show, tells us that there's tens of billions of more write-downs. Run for the hills.
No one has any idea.
Markets they're all down 50% already. Is that why you're liking them?
Exactly. I like it when it gets
beaten down a little bit. How do you call a bottom, though? What if they're down 60, 70% before this is all over?
Who has a great record of calling bottoms? You can. You have to do the same advice that you gave to your mom. Sort of ease into the position, buy a little bit, run for cover, as we've seen, right? You buy it and it's on sale the next day. So you get a little more of a bargain every day we start looking at these financials. But if you're playing it on a day-to-day trade, and we're not your mom at this point, you saw how they ran up last week. Everyone's looking for the Fed. Everyone saw it. They took off 170 points off the Dow on Friday. Nobody was going home long last weekend.
They all come back and bottom back today, though, right? They wanted to get the inventory back on the sheets now that we're in the week. Does this mean we're going to start seeing maybe in the near term, like buy them Monday, sell them Friday, so you can start doing the opposite? Can you buy on Friday, sell on Monday?
I think you're going to start to see that just this week only because we have the FOMC. So it could be week specific. But you got to remember, FOMC not on the schedule to meet until March, I believe. They can have the intermeeting.
We've already seen such a concerted effort from the Fed, from the politicians, from everyone that are focused on this quote-unquote credit crisis.
Right.
By the time they actually get anything implemented, you know it will have resolved itself anyway.
Right.
And is that maybe, I mean, is this a classic Fed cut bottom that we've now put in?
I would like to think so. I would like to think so. But unfortunately, every time the market sees what Ben Bernanke is going to do, they up the ante a little bit. So I think that the markets thought last week that he was going to do nothing. So he wasn't going to cut anything.
Forget the ETFs, forget the indexes. Let's get aggressive. Give me a couple of actual names. What do you want?
I want to buy Goldman. Goldman below 200 is always a purchase.
Where is it right now? Did it get below 200 again today?
It dipped down to 193 when they announced job cuts across the board, and it was focused in on the FOMC. So I think that popped to maybe 196.
So it's still a buy? You'd be buying this thing? Is this a trade or an investment, or both?
A little bit of both. I think you really have to stay in front of your computer. Do not get up and go to the bathroom when you're trading the financials.
For the record, by the way, guys, the reason I ask is that a trade or an investment, it's very important. You always determine your time horizon before you put money to work. If it's a trade, keep it a trade. If it's an investment, let it be an investment. What else? Give us another name.
Switch over. Let's go to energy, which you hate. You think the play is over. Unfortunately, it's up and down. It's a roller coaster. If you have some Dramamine, you want to be playing this sector. SLOB, SLB, Schlumberger, code word SLOB. You know that as a trader.
I call it slobby.
Yeah, there you go. And Chesapeake, CHK. They feel in the sector it's been beat up. It was in Barron's this weekend. They feel like it's a little bit overdone on the sell side. Could be a little bit of a bang for your buck. Trades in the mid-30s now.
I like Glowworm. Corning, which not obviously an energy play, a technology play. I like those a lot better. I was just throwing that out. You made me think of it because they reported this morning.
It was actually
they have no effect. Gave a green light on several things on the flat panel business. All right, so but wait, let's talk energy for just one more minute. The thing is, all of those stocks, they're up, several 100% from their lows, and now, they're range bound. Like it sort of reminds me of Microsoft between 25 and 50. What am I going to do with that? Not much. Apple between 150 and 250. The risk reward of the actual investment in these things is over, Steve. No.
Right. Well, I don't think so. I think when you start talking about trading ranges, I'd like to buy SLB around 80 and sell it at 100. That trading range works as a trader. Is it over? I don't think so. I mean, I think these things are going to be. What's the alternative? Where are we going to go? We're not.
Treasuries.
Tell me, no. It's always going to be a good play.
We're in a gilded age when people are saying, "Well, I got to buy it because, what's the alternative? I got to get my money to work somewhere."
Yeah.
Thanks, man.
No problem.
On tap, we're kicking off a round of quick shots when Happy Hour returns.